afternoon, friends. I am Atul Sopti, MD BHEL. I have with me our functional directors, Mr. Subhadra Vishwas, Mr. Amitabh Mathur, Mr. Akhil Joshi, Mr. D. Bandyopadhyay, and Mr. Dipankar Guin, our Executive Director Corporate Strategy, Mr. G.K. Hadau, ED Power Sector Marketing, and Mr. Subodh Gupta, our General Manager Corporate Finance. A very warm welcome to all of you. Domestic economy is gradually picking up the pace and high-frequency indicators are pointing towards the same. Complementing this, Union Budget has emphasized on driving growth through infrastructure and has come out with several budgetary responses. In 2018-19 budget, ladies and gentlemen, an all-time high allocation is being made for Indian Railways. The capital expenditure pegged at 1.48 lakh crores is towards capacity expansion and modernization, which is very encouraging for industrial players like us. As you know, we are already working closely with Indian Railways and have delivered indigenously developed IGBT-based propulsion system fitted air-conditioned AC EMU for Mumbai suburban railways. The efforts of government to bring latent power demand onto the system is progressing well, supported by various schemes and regulatory changes. To intensify the thrust, government is making budgetary allocation of rupees 21,550 crores to such schemes, which is likely to provide a boost to electricity demand. In addition to investment at demand side, capital outlay in the form of internal and external budgetary resources totaling to around rupees 55,000 crore is expected in supply side of conventional power, which includes thermal, hydro and transmission as well. Speaking of stressed power assets, the resolution of such assets is moving towards positive direction and at gradual pace. In recent times, we have seen conversion of large tenders where we are favorably placed into orders. 2 into 660 megawatt Udangudi project in Tamil Nadu has been awarded to BHEL and project work is starting now. Moving to operations of BHEL, up to the third quarter of 17-18, we commissioned and synchronized 3897 megawatt of power projects. We had an order inflow of over 12,000 crores during the quarter 3 of the current financial year. Some of the major orders received are 2 into 660 megawatt Udangudi project in Tamil Nadu, renovation and retrofitting of ESP at NTPC Kahalgaon, 146 sets IGBT-based 3-phase electrics for MEMU, 95 sets IGBT-based propulsion equipment for electric locomotives from Indian Railways, 280 traction motors from Indian Railways, 6 sewage treatment plants totaling to 25.42 MLD capacity from Raipur Development Authority, Chhattisgarh. With this, the total order outstanding as on 31st December 2017 stands at rupees 1,02,201 crore, constituting around 79% from the power and balance from industry and international operations. Now coming specifically to the quarter 3 results, turnover for quarter 3 is rupees 6,494 crores. PBT and PAT for quarter 3 are rupees 190 crores and 153 crores respectively, compared to rupees 125 crores and rupees 94 crores of last year. Thank you all of you once again for joining the conference call. We will take the questions now. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time may press star and 1 on your phone. The first question is from the line of Gopal Gare from Bernstein. Please go ahead.
Hi, thanks a lot for the opportunity. Sir, firstly, wanted to understand on a YOY basis, our gross sales is largely flattish. Would it be fair to assume that your slow-moving book would still be around 25,000 odd crores, or has it come down? And number two, within that is, since quite a few of your orders have actually started moving in the last 5 to 6 months, including Yadadri, etc. So the execution on that, how is that progressing?
Okay, first of all, I'll talk about you mentioned about the slow moving or the whole projects. We have made a substantial progress in the last 1 year period. And in fact, our executable order booking, the order booking which I have been talking from the last few quarters, has gone up from 54,770 crores at the end of the last financial year, Q3, that is December 16, to 81,007 crores as of December 2017. It means a growth of almost 48%. So this is a very, very positive development for the organization as such. Regarding the flattish top line, the reason has been, in fact, many of the projects which we are expecting that they will take off in the beginning of the year, financial year, that is either Q1 or the early period of the Q2. Unfortunately, they got delayed. Like our Yadadri project, which is 20,000 crore project, that got the clearance only in the month of October. Then these projects are Udan Gudi as well as the Bhusawal project we have now recently received. These orders have come only recently, which we are expecting will come in the first quarter. And certain projects where we are expecting the hold will get lifted, smaller projects of course, that has not got lifted. So that is one of the reason of having the flattish top line by and large. But still, in the Q3, we have made efforts and there is a top line growth of 5%, which I feel is reasonably.
Sure, sir. Secondly, on the other expense, a couple of questions on the expenses side. The other expenses on a sequential basis has declined. Wanted to understand, has it got to do with any variation in the wage provisioning, which you actually book in other expenses, or got to do with any other provisions which were sort of adjusted or reversed? And within that, the second question also on expenses is tax rates have again been actually quite low compared to what you've reported in the last several quarters. So what's actually the driver for that?
Okay, coming to the miscellaneous expenses, the figure or other expenses which you would be seeing there, basically you would be seeing that figure of 1098 crores, which will be 721 crore, which is 377 crore up. But if you take only miscellaneous expenses, which excludes the write-offs, then if we get in 17-18 figures, a figure of 735 crores as against 742 crores, which includes a miscellaneous expenses exclusively for the operations of 541 crores as against 546 crores in the last financial year 16-17. It is because of the tight control over the expenses we have been able to achieve this. Otherwise, it's as per the normal practice.
So
coming to the... Yeah,
so
please.
just to clarify on this, so I was actually comparing 1098 crore in Q3 to 1256 crores in Q2, which is sequential, September versus December quarter.
Okay, September versus this thing. That figure, I think we can see that. Basically, there is a 1098 includes a provision including the write-off of 363 crores.
This includes...
As against the... Yeah, it includes the 363 crores as against 545 crores in the Q2. So, but if you exclude this provisions write-off, then it is 735 crores in the Q3 and 711 crores in Q2.
Okay, so the provision is 300 odd crore as compared to 500 odd crore in September.
Yes.
Fair enough. And the tax rate basically.
Yeah, I'll just explain the tax rate, sir. This is Subodh Gupta.
Yeah.
Yeah, actually, tax rate has been...
Actually, the tax liability has gone down by 5 crores. If you see, there is a margin by 15 crores for the quarter. Mainly because of withdrawal of certain, liabilities. So this tax liability is down by 15 crore only for the quarter. I think that you are talking about.
Yeah. That's right.
Otherwise, tax rate have been taken as the same.
It was earlier.
Okay. Sure. Got it. So I have a few more questions. I'll queue back in. Thanks a lot.
Yeah, please, most welcome.
Thank you. Next question is from the line of Abhishek Puri from Deutsche Equities India. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Sir, just wanted to check your gross margins or raw material to sales ratio has been, 300 to 400 basis point lower than last year. What has been the reason for the same? Because we think that the steel prices have been going up, and still your margins have been quite good. That is question number one. And secondly, on the industrial segment specifically, if you can give us the breakup of the orders in power and industry. And last 1 year we have seen, 4 or 5 quarters we have seen that industry orders have been inching up, but your turnover in industry segment has been declining consistently in double digit. When can we see the reversal of the same, sir?
Okay, coming to the first question. On the material side, in fact, as you know that material portion constitute almost 60 to 65% of our total cost elements. So we have been making a tight control over the material cost. Despite your saying that the steel prices have slightly gone up, there is a lot of design optimization which has taken place. And the most important thing which has taken place is the indigenization, which in the supercritical sets. And you know that now supercritical sets composition here has gone up substantially. And based on the indigenization, we are able to reduce this material cost. Then we have been doing the very bunching of the sourcing of the material also. The orders which have come together, the way we have started, bunching of these material, this is giving us the economy of scale. So 3 factors I mentioned. One is the design optimization. Second is the expeditious and early indigenization and better indigenization as compared to the earlier years. And third is the better sourcing. Now coming to the composition of your out of the 1,02,201 crores of the orders which are available with us, out of that 80,173 crores are power sector, and industry sector today is 8,404 crores, and almost 13,000 crores is the international operations. Industry sector, of course, orders are coming, but the volume is not of that order which compensates for the power sector. But the way, the kind of efforts which are making, especially in the transmission sector and defense sector, as well as the solar also, we are quite hopeful that their share will go up in the coming period.
This is Amitabh. Just one more thing, Puri, you should understand that the industrial segment comprises, the products as well as projects. The bigger orders are projects, where, particularly the HVDC projects in transmission area and, in solar area. So the mix actually results into the kind of revenue you are going to get. Because there are some slow moving and there are fast moving. Products will be very fast moving products where revenue earners, whereas the projects will be slow. So if you see the composition last year as an order book vis-a-vis the revenue, you'll find your answer to this actually. But once our order book is going up substantially, I think this will all convert into revenue someday or the other.
So what's the composition, if you can give us, what it was last year and what is it this year?
You want a composition of the outstanding order book?
Projects versus products in industry segment, as you said.
That would be difficult to do right now because...
Anyway, that separately you can give it. Separately, Mr. Amitabh Mathur will give it to you.
And if I can ask one more question on the capital employed for power business has gone up by almost 1,500-1,600 crores for the current quarter versus last quarter. And your other... the unallocated segment has reduced. So, is it right to assume that working capital has gone up in power and your cash balance is reduced? Or if you can give us the numbers for that?
Yeah, okay. Our finance team will...
Sir, actually, this is because of, the debtors, increase in debtors, almost there is an increase in debtors because of our GST issues, are still pending with the customer. The contracts are under amendment with the customer. So, once those are resolved, I think this position should improve, this working capital. It is because of increase in working capital, as you rightly said, and because of that, capital employed has also gone up. So once those issues are resolved with the customer, right now it's time taking.
What is the cash balance, sir?
Cash balance as on date, means for the...
As of December.
As on date. 9,200.
Thank you. I'll join back in the queue, sir.
Yeah.
Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir.
Good evening, Renu.
Sir, 2-3 questions from my end. If you look at the staff expenses on a sequential basis, there has been a 4% reduction. So, is it some reversal of certain provisions that we do for variable pay or a reflection of reducing employee workforce? Do we expect this trend to sustain going ahead?
Okay, there is a basic reason. You rightly mentioned that the staff expenses has gone down from 1,417 crores to 1,338 crores. which is of the order of 5.6%. Primarily reason is, as on 31/12/16, our staff was 14,302 crores, which has gone down to 38,052. So that is the reason that staff expenses have come down.
Okay. And what would be the status on our wage negotiation? When do we expect to close it for
Wage
the
negotiation is for executives we have already finalized, and for supervisors also is almost finalized, and workers wage negotiation will start in the coming months.
Okay, so it will still take about 6 months at least for that.
Not necessarily, it may be early also, but we are making provisions based on our own assessments.
Sure.
We are making provisions.
Right. Second, sir, if you can share with us what is the kind of ordering pipeline that we have today, given that year till date, except for the FGD order, we haven't seen large BTG tenders getting finalized. So, how is the scenario there in terms of the ordering for the main plant and the pipeline for FGD projects in the coming 12 months?
Okay. First of all, I'll talk about the total order book scenario which I mentioned to you. Up to Q3, I mentioned that we have secured the order of 15,750 crore. January and February up to 7th of February. Now we have total orders which have been received by BHEL is 19,822 crores. Close to 20,000 crores orders have already been received. The major orders which have been secured, I mentioned in the beginning itself that we have been able to secure this Udangudi order around 7,400 crores, 2 into 660 megawatt. And now in the month of January, we have got Bhusawal order. That is 1 into 660 megawatt. That is close to 3,000 crore. In addition to that, we have been able to get the additional order for the Yadadri, which is around 2,500 crore. And I mentioned certain order of the industry sector which have been secured by us.
Right.
In the recent days, we have been able to get that NTPC Dadri order also. That is around close to 560 crores.
Right.
And spares order also we have been able to secure. Talking about the pipeline orders, if we talk about the power sector, there is a Patratu order which is 3 into 800 megawatt. There is a Panki order 1 into 660 megawatt, which both these orders are progressing well, and if everything goes well, the things should get finalized shortly. Then we are working for the FGD for the Kothagodam project, and for Bhadradri for the FGD, SCR and the boiler modifications. These are the orders which we are favorably placed in the conventional side. But if we talk of the nuclear side also in the Gorakhpur 2 into 700 megawatt SG package, there also we are favorably placed. Then in the spares area also there are certain 2 tenders of the R&M, that is Farakka and Ramagundam, where we are favorably placed. These are the orders we are favorably placed, and if everything goes well, they are in pipeline.
Sir, the projects which are there in pipeline for tendering, as in the tendering pipeline, for the overall power equipment market, we were expecting about 7-8 gigawatt worth of projects.
Yes.
But none of the orders, including Talcher and others, have come through. So any update on those?
I mentioned about these are projects which are likely to be finalized maybe in the next 2 months. But if we talk of the future potential, there is, of course, you rightly mentioned, Talcher is there, 2 into 660 megawatt, and now price bid is due in the month of February. If it doesn't get postponed, then it's in February. Then Singrauli is there. That is bid is expected in the Q1 18-19. That is again 2 into 660. There is Singareni is there 1 into 800 megawatt, which we are already negotiating with them. Right. Then Naveli Lignite Corporation and our NLCs, which is known now, is there 2 into 660 megawatt. Expression of interest has been issued for the pre-qualification. We are expecting NIT for Khurja project also THDC 2 into 660. SJVNL Buxar also we are expecting. Then NIT has been issued for the Sagar Digi, that is 1 into 660 megawatt. So these are some of the projects which are working in our hydro. We see in Jammu Kashmir that Pakaldul is there 4 into 250 megawatt, and smaller project Loktak and Chillar Loktak is also there.
Right.
So pipeline, as you mentioned, 7 to 8 gigawatt, I'll say it's close to 10 gigawatt.
Okay.
There are maybe more than that. Yeah.
Right. And so my last question is on the emission norms. Leaving apart the retrofit projects, we probably have the largest under construction backlog in the sector today. So what are you seeing the response from customers ex NTPC, especially state SEBs, with respect to implementing the FGD and NOx on the under construction jobs? And in your sense, by when do you think the awarding for the under construction project should happen through?
There is basically, I think things have already started moving. Recently also people are asking that when it will happen, but we are having the major orders, for example, today also for FGD, almost 13 number, I think, 30 numbers we have for FGD. NLC has floated tenders for 22 projects, that is 49 units, totaling to 28 gigawatt, and this is NTPC. NLC has also floated tender for 3 into 660 megawatt, Ghatampur, and 2 into 500 megawatt, Neem Valley project, and PGCL for 1800 megawatts for Vanagpuri, Sikka and Ukai. Total tender floated as of now is almost 37,000 megawatt. So let us see, things have started moving. I think now people are, ready for that kind of investment. Initially resistance was there, but things have started moving now.
Sure. Thank you so much, sir, and all the best.
Thank you, Renu.
Thank you. A reminder to the participants, request you to limit your question to 2 at a time. If time permits, we will come back to you should you have any follow-ups. The next question is on the line of Kirti Jain from Sundaram Mutual Fund. Please go ahead.
Thank you for the sir, what is your yearly spares business, sir?
Yearly?
Yearly spares business?
Space business. Space business yearly is close to 3,000 crore. Basically, it is, of course, last year, 16-17, we secured the order of 2,700 crores, which we hope that this year it will go up. In the same ratio, the orders will be there. But our target is to increase this much more.
Sir, in our stuck projects, how much would be now stuck projects, sir? Earlier we quoted the number as 5,300 crores last quarter. What would be the stuck projects and cancelable projects, sir?
If I talked about the stuck projects, basically I mentioned to you there is really stress projects are 5,140 megawatt, totaling to 4,300 crore. But there are certain projects where zero date is yet to start. As last time I had divided into 3 portions. There are certain projects where zero date is yet to start, that is 2,400 megawatt. There are zero date is yet to start, so no liability, no investment, no expenditure on that. There are certain stress projects due to the political disturbances, that is in Syria and Yemen, that is around 1,072 projects, 72 megawatt. There are projects which are going to be cancelled, that is 3,900 megawatt. But really with the projects which are balanced projects, which are stuck up and stressed, that is close to 5,140 megawatt. Out of that also we are seeing some light in the projects like Maheshwar, 400 megawatt, that already PFC is taken over, that will move ahead. I am expecting that 1050 megawatt Monet may also start in the near future, the way things are going on. Ramgarh, we are working very closely with the Rajasthan government for moving it forward. This is a gas-based project. Surana also, we are working out some strategies that may also move. There is another project, 1320 megawatt at Ranatpur DVC, this being a government of India, we are working with them also. So these are the projects which I hope will get revived in the coming days. But of course, I don't have any hope on the revival of the projects for Abhijit phase 1 and phase 2, which is 540 megawatt each. Yeah, this is the position of the stuck projects.
So what is the value, sir, of
if we talk of 5,140 megawatt which I mentioned, which excludes the zero date yet to start, political disturbance, you exclude that, and likely cancellation, then it is around 4,300 crores. This balance is stressed, taking those things into account.
Okay. So, sir, in other income, sequentially there is a drop in other income. So, any reason, sir?
I'll just tell you. There is there is, if you talk of the other income project, just a minute, then you would see there is a, it is basically 137, if you talk of quarter 3, there is a difference of only 1 crore. It is primarily due to the exchange variation which has taken place, only because of exchange variation. You're talking of, if you talk of, you are talking of up to quarter 3 or for the quarter 3? For the quarter,
Yeah, Q3.
basically it's because of exchange variation. Sorry.
Thanks, sir. Thanks.
Thank you, sir. The next question is from the line of Mohit Pandey from Citi. Please go ahead.
Yeah, hello, sir. Sir, according to you said that at the year to date you have won almost 19,822 crores. So based on what you have given, it looks like you have won around 4,072 crores after the end of the quarter. But the numbers don't seem to be adding up, because you said you got additional orders from Yadadri of 2,500 crores. Bhusawal is a 2,800 crore order. So these two itself takes it up to 5,300 crores. Then you said you won another 560 crores orders. So in terms of what you have said, it looks like after the end of the quarter, you have won 5,860 crores. So 5,860. So your order inflow year to date should be more than 21,000 crores.
I'll explain to you. First of all, I'll again repeat. 15,750 crores were received up to quarter 3, which included the order for the your 2 into 660 megawatt Udangudi, that is 7,400 crore, which included the Yadadri additional price, because that came in the month of October. So 2,400 crore is part of that 15,750. Then there was Tangetco, Uppur and NSPCL, Rourkela boiler modification, all as well as some industry sector. All this put together was 15,750 crores. Now coming to the balance period with the orders have come. As I mentioned, we have received in the last 1.5 months or less than 1.5 months more than 4,000 crore orders. That is 4,072 crore to be precise. This includes primarily Bhusawal project, that is 2,800 crore plus, NTPC Dadri project, that is 560 crores, then balance are the spares and the industry sector. So total orders which have been received in January and February is close to 4,072 crores. I hope now it's at 15,750 plus 4,072 will be 19,822 crores.
Okay, sir. So this, on a related note, you're currently in your L1 pipeline where you are the lowest bidder. You have Panki and Patratu, right, sir? And shouldn't we be including Singareni also in that L1 pipeline?
Singareni we are not including because prices are really yet to be finalized and agreed to. We are, of course, Singareni we are the lone bidder. At the moment we are not included in that pipeline, but yes, that is in our radar.
So if you include that also, I think your L1 pipeline is around 3,860 crores, if I am not wrong.
3,800. So much
Patratu is 2,400.
Patratu itself is more than 11,000 crore plus.
No, sir, I'm telling in terms of megawatts, 3,860.
Megawatt, yes, that you can add, yes.
Okay. Now, the other question I had was on your depreciation, sir. When I noticed this year, first 9 months depreciation is lower than last 9 months. Then second quarter depreciation was lower than first quarter. Third quarter depreciation was lower than second quarter. Why is your depreciation falling every quarter?
Because not major capital investment is taking place, and that is a major reason. Yeah, that is a major reason.
So, but you are doing straight line. You're doing straight line depreciation, or you're doing accelerated depreciation. I mean, you're depreciating the gross block? Why is the gross block coming or coming down every quarter?
No, the gross block is not coming down. It's the net block which is coming down. It's on straight line method. So what you have said, that we have provided for 187 crore in quarter 2 of 17-18, and then 182 crore. So there is a marginal, dip of 5 crores in depreciation. But as Chairman has just now said, it is because of the investments, has to happen, then only it will improve.
Very marginal change will definitely take place. It cannot be exactly same percentage because some of the projects might have outlived their life. They might have become the zero net block. Then depreciation will not take place. But these figures are correct.
Okay, sir. Sir, one final question. Now, you said that your active backlog has gone up meaningfully over the last 1 year. Your active backlog is almost like 81,000 crores. So, is it reasonable to expect that with this 81,000 crores, you can do at least 35,000 crore kind of top line next year? Or is it a little too much?
I will not like to hazard a guess. We will have to do the detailed analysis that when this, orders have to be delivered, because sometime order have to be delivered in 36 months, 42 months. Nevertheless, we will be carrying out exercise and let's see.
Okay. If I ask it differently, this Yadadri part, which is your biggest order, is it ramping up in a very big fashion next year, or the ramp up is actually happening in FY19?
It will be basically maximum ramp up will take place in the FY19. But of course, good turnover amount will come next year also because it's a 42-month cycle. Two units have to be done in 36 months and balance units in the 42 months. So accordingly, we can work it out. Some portion will definitely come next year and balance will come in the next to next year.
Okay, sir. Thank you and all the very best.
Thank you, dear. Thank you.
Thank you. Next question is from the line of Aditya Bhartiya from Investec. Please go ahead. Your line has been unmuted. Please go ahead with the question.
Hi, sir. You had indicated that working capital this quarter had gone up on account of GST-related issues. Could you please share with us what's the quantum of debtors or receivables at the end of third quarter, and by when do you expect those debtors to be coming down?
If you talk of the receivables, if you talk of the trade receivables, as at the end of the third quarter 17, it is almost 25,700 crores. Trade receivables.
Okay.
And long-term receivable will be around 9,300 crores. So total will be around 35,000 crores. But if we talk of the collectibles, these are the trade receivable is one thing, but collectible is only 25,800 crores. Basically, we restrict ourselves our debtors to the collectibles because rest are deferred. In fact, unless we complete the work, that will not be included. So collectible debtors, you please note down, is 25,800 crores.
Sure, sir. And how should we be looking at it from a 1 year perspective? Do you expect these numbers to be coming down sharply, or would you be happy if these numbers hover around 22,000, 25,000 crore?
I think what you mentioned last, that efforts are being made to reduce it, but if the turnover goes up, then in the same ratio, it will also go up. But we are making all our efforts to reduce this particular number. Or we have, as you know, that we have formed a project closure synergy group, which is working very closely with the customers for closing the projects and reducing the receivable also.
Right. And sir, if you look at industry segment, over the last few years, we have seen order inflows being meaningfully lower than the peak levels that we had seen earlier, maybe around FY10, FY12. So what exactly is that on account of? And do you see this segment as being a growth driver going forward?
I hope that it will definitely go up. That if you see in the up to the quarter 3, in 15,750 crores which I mentioned, almost 4,000 crore has come from the industry sector segment, which is a good increase because last year it was hardly 2,700 crores.
43% increase. 43% increase.
Almost 40% plus increase. And transportation segment, that has increased substantially out of this. We are quite hopeful that this segment will definitely leapfrog. Quantum jump is expected in the industry segment, especially in the transportation and the solar area.
Sure, sir. Understood. Thanks a lot.
Thank you. Next question is from the line of Bhavin Vitlani from Axis Capital. Please go ahead.
Good evening, sir. So first, if you can help us, what was the foreign exchange variation loss for the quarter?
Exchange variation was minus 72 for the quarter 3.
Okay, so if you can help us, because what we saw was other income was 485 crores in September quarter, 415 in June quarter, but now it is coming.
Okay, I'll explain to you. In the quarter 2, other income was 485. You would be seeing it has gone down to 137. Okay, out of that, the interest income in the 485 was 200 crores, which has gone down to 130 crores. But the exchange variation, there was exchange gain in the quarter 2, which was 186 crore, which has been converted into loss of 72 crore minus. And the balance is the others recovery from suppliers, etc., which is not substantial change. So impact is on account of exchange variation as compared to the last quarter, because if you see on 30th September 17, the dollar was 65.8. It has gone down by 1 rupee 30 paisa. Euro was 77.81. That has also gone down by 41 paisa.
Okay. So the second question is, you mentioned that transportation segment has seen substantial increase. You also highlighted about large orders from railway sector in your opening remarks. Would it be possible for you to give values of these orders?
Yes. You have the in the industry segment. Can you read the? Yeah.
In the industry segment, the larger orders, the value was 672 crores for the 146.
I'm sorry to interrupt, sir. So you're not clearly audible.
Yeah. You see, there have been a lot of orders on the traction side, propulsion side actually. So we are having about 672 crores of a propulsion order, 3-phase electrics for MEMU. Then we have another 88 crores worth of order for the same MEMU converters. And like this, there are quite a few orders totaling to something like 800 crores or so from transportation sector. The total order book for transportation within the entire segment is now crossing 2,100 crores overall.
Okay.
One more order, which is a major order which has been secured in the last 9 months from the railways after a gap of almost 10 years, is the 30 numbers electric locomotives, which is one of the big orders in the electric locomotives. I mean, close to 375 to 400 crore. Major orders. And we are very hopeful that electric locomotive, the way electrification is going on in the Indian Railways, many more orders will come in the electric locomotive segment.
Yeah, particularly on the electrification side, yes.
Yes. So other part you mentioned that your spares business and R&M business, you are expecting substantial increase. Would appreciate if you give some more color on this.
Look, we have been, I mentioned that 2,700 crores last year was, we could achieve that. Out of that, basically spares, if you exclude the R&M job, it was 1,800 crores. We are quite hopeful that there is going to be substantial jump in these numbers in the coming period. Of course, up to quarter 3, we have been able to get close to 1,900 crores. But in the balance period, we are quite hopeful because many projects we are lowest in R&M projects. Specific numbers I will not be able to tell you just now that how many crores we will be able to achieve in the current financial year.
Yes, so but if you just take spares and R&M business over a 3-4 year basis, how large can this become? 5,000 crores?
Yes, it has the potential of becoming 5,000 crores in the coming at least 3 to 4 or 5 years. Definitely it has the potential, and we have to bring it. We will be working in that direction.
Sure. So my last question is in the other expenses. If you could split what was the provisions created and withdrawn for third quarter and 9 months.
Just a minute. If you talk of the other expenses, I explained to you that for the quarter 3, the other expenses were 1098 crore. Out of that, 541 crores were the miscellaneous expenses and provisions including write-off of 363 crore. We created a provision of 809 crore and withdrawn of 450 crores. This is the position.
So is it possible for you to break it in terms of contractual obligation, debtors, and
these figures I think I'll tell our finance people to give it to you, but it includes close to 250 crores for the provisions for the wage revision. So every quarter we have made a wage provision of 250 crores. Rest of the figures, I think you can get in touch with Subodh Gupta to give the exact figures of that.
Yeah, sure. So thank you so much for taking the questions.
Thank you. Next question is on the line of Rahul Murkia from Jefferies. Please go ahead.
Sir, hi, just Lavina here. So you might have mentioned this, but I would have missed it. Out of your 15,750 crores of order flow, how much is industry order flow?
Just a minute.
Within that number?
Out of that, close to 4,000, 3,900 plus crore was the industry.
Is the industry. And so basically this 250 crores provision that you're doing in other expenses, I just wanted to understand on a quarterly basis, this will also include your workman compensation revision that you all are expecting,
yes,
right?
Yes, basically 250 crores includes everything. For workmen also, for executives also, supervisors also.
Great.
This is on quarterly basis I am saying.
On the quarter. Sir, and last thing just to understand, this is again referring to an earlier question. What is the kind of, let's say over the next 12 to 18 months, if I put the SOX and NOx renovations aside, your pipeline you would get, for the industry as a whole, apart from BHEL, you would still stick to the 8 to 12 gigawatts, or you think, I mean that range, what do you think it would be overall?
I think market for the main projects will be, now I will not, for the next year would be 8 to 12 gigawatt, yes, on that order.
In that for the industry as a whole?
Industry
okay.
as a whole.
Great, thank you sir.
Thank you.
Thank you. Next question is on the line of Charanjit Singh from BNK Securities. Please go ahead.
Hello sir, thanks for the opportunity. Sir, in the beginning remarks you had talked about, that definitely in the budget there has been increased spending on the railways. We have seen good traction, till now in the railways, and how do you see, now going forward in FY19, which segments in the railways can, drive order inflow? What could be the size of this opportunity, which is, addressable by BHEL in this overall 1.5 lakh crores?
Railways, in fact, as I mentioned earlier also, in the transportation business segment, we already secured orders worth 2,000 crore. One of the highest which has been achieved by BHEL so far. In 16-17 we had, for the whole years it was almost 1,100 crores. We are looking for opportunity in railways, as our director mentioned, especially in the electric sides, the propulsion systems. Second expected is the electric locomotives we are expecting in the coming future. Then the old locomotives, some regenerative, some retrofitting has to be done. That is another business. We are also trying to work out for the electrification in the railway side. That also we are trying to work out. A lot of opportunities are there in the Indian Railways, which we are working very closely, not only for the new orders, but for the development of the new systems as well, products also.
So, sir, when we are talking about electrification on the railway side, so we plan to take up the EPC, projects for railway, line electrification. That is what we are talking about?
Yes.
Yes, we are already given our expression of interest to the Indian Railways. They are examining that.
Okay. And sir, apart from this, in the other industry segments, how do you see the traction? Because we have also built a lot of competencies in the defense side, and transmission also we have quite a lot of competency. So those are the segments where again defense government has been pushing a lot of orders going forward. How do you see that panning out?
Yeah, we are expecting, in fact, defense side. Last year we received an order booking of more than 500 crores. But this year, so far, not many orders in the defense sector has been finalized in the country. But in the balance period, we are expecting some more orders to come. Defense is definitely an area. If not in the balance 1.5 months, next year definitely there is a quantum jump in this particular area. We are expecting in the transmission side also, in the balance period, some more orders to come. Already we have secured orders worth 360 crores in the transmission side. More orders are expected in that area. There are in solar also. we have already received orders close to 220 crores, but certain orders have not been finalized or deferred so far. Let's see that when the decision is taken, that will also come. Water is another segment we are trying to pitch in a big way, and we hope that the next year more orders will come. We are expecting a good business, in fact, in the industrial segment also. With the industrial growth going up, I hope that our conventional products, which were not getting adequate orders in the recent past, will get certain orders.
And sir, on this current order backlog now, you expect the peaking of the execution in FY19 or FY20? Based on your commentary, I think mainly the peaking will happen in FY19.
Speaking of, I am talking of these orders.
No, the execution of the current order backlog.
Next year, we will expect peaking year to keep on going. For a long period. In fact, after the peaking, we don't want to commit down. But definitely, out of this 80,000 crore which you have mentioned, this will be next year will be majority of the turnover will come from there. Of course, but we are mentioning about the industrial segment. In the industrial segment, in the balance period, whatsoever order will secure, or the next year whatsoever order will secure, normally the delivery period is less than 1 year. So they will give the turnover revenues in that particular financial year itself.
Okay. And so
Sorry, sir, I would request you to return to the queue for any follow-up.
Yeah, this is just one last question. And sir, on the FGD side, we have seen 3-4 orders getting finalized. What is your comment on the pricing environment which you would have seen, and when do you see the bulk tenders for NTPC now getting finalized for the FGD?
Let us see. Pricing definitely is becoming competitive, and but we have definitely participated based on our own cost estimates. That is the reason we have been successful in the Dadri project. And of course, NTPC is going one by one, and we are participating in those tenders. We are quite bullish about the FGD tenders.
Okay, sir. Fine, sir. Thank you, sir. That's all.
Thank you. Next question is from the line of Chinmay Gamre from Future Generali. Please go ahead.
Sir, thank you for taking my question, sir. Sir, the L1 which you mentioned, basically Patratu, Panki, these projects, and also Gorakhpur. So all put together, how much value-wise would these projects add up to?
The value I would not like to total it up. That you total it up yourself. But I mentioned about this. You know the figures better than me. Huh? Panki is there, Patratu is there, then your Gorakhpur is there. Gorakhpur is there, and then certain particular FGD of Kothagudam is there and Bhadradri is there.
Okay, sir. Sir, and one clarification regarding the wage provision which is sitting in the other expense. So once everything gets finalized, they will be moving to employee cost?
Obviously, they will move it to the cost of payment.
Yeah. Thank you, sir.
Thank you. The next question is from the line of Ashish Shah from Goldman Sachs. Please go ahead.
Sir, this is Pulkit. Thanks a lot for taking my question. So my first question is on the comment you made at the start, where you mentioned that because of indigenization, you've been able to do a lot of cost control on the material side. Sir, as we look at the next couple of years, do you think there is scope for us to do more on the indigenization front, or we should expect the material margins to remain in the level where it is at this point?
I think if you talk about the supercritical, we have achieved a good indigenization. Of course, it will depend on the requirement of the customer. If they agree without based on our product itself, definitely this particular percentage will continue. And maybe there could be, 1 or 2% it can go down. But only thing is in the industrial business segment or the new projects which you get, then material, it will depend on the composition of the total revenue, how much is coming from the power sector, how much is coming in the industrial segment. But this is a, good level of the close to 60% which has been achieved by us.
Sure, sir. So that's helpful. So my second question is, as we look back last 1 year, so we had an order book which was similar to this level, maybe slightly higher, but we had an executable order book of about 55,000-60,000 crore. Now we have an executable order book of about 81,000 crore.
Correct.
Should we assume that a higher executable order in the immediate term can get you a much higher revenue? So what I'm trying to say is that even with a 60,000 crore order book executable, you did a 30,000 crore kind of a top line. with 81,000, can that number jump up significantly, or the execution rate of these orders are such that obviously it helps us in FY20, but for FY19 it will be a similar rate as to what we achieved this year?
You rightly mentioned, definitely it will have impact on the top line in the coming years. How much impact it will be there, we are trying to work it out. But immediately next year, if we feel that, because majority of the orders have come in the last 2-3 months period only, and if we go by the conventional revenue exercise, normally in the first year 5 to 10% comes. But we are going for the compressed execution schedule. I'm quite hopeful that there will be improvement the next year, but definitely out of these new orders, majority of the turnover will come next year. But good amount will come next year also.
Understood, sir. So thanks a lot for that.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to Mr. Karan Rathod from ICICI Securities for his closing comments.
Sopti sir, any closing comments from your end?
I'd just like to thank everybody for the enthusiasm shown by everybody in the questions. I mean, these were very useful and helpful for us also. Regarding if we talk about the closing remarks, I like to say that emphasis on the infrastructure by the government to drive the growth is very, very encouraging. And we are quite hopeful that we sustained improvement in the industrial sector, which will revive the capex cycle. And I believe that investment in the infra project, new projects like Bharatmala, Sagarmala, railways, and inland waterways, Namami Ganga, definitely these will lead to the higher level of growth trajectory. For us, as I mentioned in the beginning also, and again I like to repeat that, our focus will be conversion of non-executable order to the executable order, where we have achieved substantial success in the recent past, and the contracts where we are L1. That will be the top of priority in the short run. And in the long run, definitely business diversification efforts, which will bear the fruits in times to come. Thank you very much.
Thank you very much, members of the management. Ladies and gentlemen,